Welcome to this In the Chair interview with the CIO of Mutares. I'm Neil Shah, market strategist at Edison. Johannes, when we spoke, it was probably about 6 months ago in August, you described the environment as beautiful for Mutares. 6 months on, how's that played out? Where are you seeing the richest deal flow right now?
Well, thanks a lot for hosting me today, first of all. Lovely. Well, I think it played out very well. So when we met last time, indeed, life was good, life was beautiful. It was summer as well, but we made a couple of deals, in fact, and the environment was very, very helpful. The pipeline was super full and super rich. And we have conducted a large deal in the Nordics recently there, to highlight maybe one of them.
Yeah.
And then a couple of days back, we have signed the transaction with SABIC on the chemical side, which was, from a turnover perspective, the largest transaction Mutares has ever conducted. So we acquired their ETP business for in the US predominantly. With a revenue of above $2 billion a year.
Well, that's significant news. I mean, this is the biggest acquisition you've done to date.
Yes.
And two or three interesting elements to it. The sector it was in, the size, and in particular, I'd love you to articulate what made this carve-out particularly attractive, and also the country exposure, I think, was interesting. So maybe talk a little bit more about that.
Yeah, sure. So the transaction as such is important for us from a size perspective, as you said, from a geographical point of view, but also from a sector. So what I believe is, we invest in turnaround situation. We invest in, we buy companies in sectors which are in a kind of a transformation where things has happened. So 10 years ago, it was the auto industry with the EV. Then it was a little bit of retail when the e-commerce started to come in. And now I think chemical and materials in general, it started a little bit off with steel a couple of years back, and chemical came now, which is a sector which is in motion, so to say, right? And so there are really a lot of assets, believe me, at the moment on the market, European chemical assets.
Okay.
But to my view, is we have looked at them, but the one which was really attractive to me was the one we acquired at the end of the day, because there was the American exposure. So after, we are done, we have, above 70, 75, 80% American exposure, or America's exposure, which includes Mexico and Brazil a little bit, but it was predominantly in the US. And then we have 2 plants here in Europe. But this exposure is interesting for us on a geographical. We want to grow further in the US. This is our growth market for the next years, together with Asia. And then secondly, we want to grow in this materials segment. We want to grow in the materials segment because that's in motion at the moment. And we want to grow big, right? So it's roughly $2.4 billion in turnover. This should be something which is not a one time. So we are looking on sizable assets. And the deal in Norway as well was a 450 million business. So this is the way forward, and the SABIC deal is super attractive. I love it.
Okay.
I mean, I worked with a team day and night for weeks. Right, there was no Christmas, there was no New Year. Chemical deal in America.
I want to build a little bit of context about the US. So I'm aware that you've had a Chicago presence for some time, but clearly there's a signaling there that the America is going to become a bigger part of the Mutares story. So walk us through what your expansion plans are for the US.
I mean, I'm a big fan of the US, because the US is really, what I believe is, if you want something really bad, there is always a way to get it.
Okay.
And this is for me the US. And well, despite the fact that I have family there and living down in Texas, and I love to hang around with them, but the US for our business is also something which is understandable, right? The market, the people, they understand restructuring. They understand if situations are bad, you need to do something in order to bring it back.
Mm-hmm.
And last but not least, the US is cash driven, and we are cash driven as well.
Okay.
No, you don't joke around with funny money and book gains and here and there. It's at the end it's cash, and this is why I believe that market is super interesting for us. This was why I believe the industries which are in the US, like if it's the steel, if it's the auto, if it's the chemical, there is a lot more for us in, and obviously on top. We want to have the angle in the US that American corporates who divest somewhere abroad, that we are close to them. The expansion plan in the US is clearly we are hiring a lot of people also on the operation side at the moment in the US. We will have our office in Chicago, and there is a very concrete plan to open a second office. Luckily, unfortunately, the country is so big, and I like Chicago. But I can tell you it's rough in the winter times.
Yeah.
Right, something on the house.
Yeah, you've got the wind coming off the lake.
Absolutely.
So look, I mean, I want to do a compare and contrast. So as you're looking at the US, what's the US opportunity set look like compared to Europe? Is it similar, bigger, different? And also, I think you hinted at it. What's the seller motivation, for particularly in carve-outs? Is it different to Europe? Is it the same playbook? What should we be aware of?
It's different, and first of all, let's take the SABIC deal we have done, right?
Yeah.
With the US exposure. I think there are industries and segments who work in the US while they're not working in Europe anymore.
Mm-hmm.
Okay, so a typical commodity chemical product you don't produce in Europe. Costs are too high. The Chinese are much better. The plants are too old. CapEx is too big. So don't do it. This is also so if you produce special chemicals, yes. But this type of business I would never acquire in Europe because there's no future, in my view, for commodity products. In the US, they work. And so there you have segments, industries which are still there, right?
Mm-hmm.
In the US, let's take auto. The whole EV story in the US has not arrived, and it will be difficult to arrive, right? As I said, my family lives in Texas. I mean, you don't go anywhere in Texas with an EV car if it makes only 250 miles.
Yeah.
So that's why, and you have industries in the US which are already dead in Europe.
Yeah.
Secondly, the deal structure is different. The deal structure is, while in Europe, you basically, the price of a transaction is basically dictated by the P&L.
Yeah.
In the US, the price is dictated by the balance sheet.
Okay.
So you have more leverage there. You have more, need of, investing from the very beginning. But you also have much easier to find that instruments in order to finance. So the deal structure in the US is different than in Europe. So in the US you pay the balance sheet. In Europe you pay the P&L. And then last but not least, I think the market in the US, as I said before, and the motivation for the sellers for carve-outs, they are more or less the same everywhere in the world, right? Why do you carve out something and why do you sell something to us? First of all, you have an issue and you don't want to do it yourself, right? Secondly, you want to do it as cheap as possible, right? And a lot of times, we can do a restructuring or a shutdown or a closure or whatever cheaper than you can do it, or a corporate can do it. And last but not least is also avoiding press, right? And avoiding press in particular. I mean, practically, it's not so difficult, let's say, for example, to lay off people, okay, in the US. However, for example, as a foreign corporate, you don't want to lay off people in the US for the bad press, etc., etc. So it's easier. You give it to us, you give us money, or you give it us for free, and we do the job. So the motivation is the same in the US. The deals are completely different, and the segments could be different.
Okay. And I think you talked about the fact that you're building it out, you're resourcing, getting an operational team in place, as potentially a second office. Organizationally, how do you think about it? Is this a standalone profit center? How does it work within Mutares?
No. There, I mean, we have one P&L in the holding, which is the listed holding, and but my expectation is clearly that in 5 years from now, that the US is a contributor to the profitability, which is more or less in the range of Europe.
Okay. Last time you talked, you described, I think, 2025 as a heavy exit year. And there were a number of sort of exits. Maybe you can give a little bit of color around that. And, without necessarily giving specific guidance, what's the current exit environment like for 2026?
Mm. Well, we have made a lot of exits in 2025. So the last, or January 2026, when we announced them, so we exited the Calzip in the building materials segment. We exited Connexus in the telco segment. We exited Fuentes in the logistics segment. We exited Buderus in the steel segment. So this was just the exits of Q4. Okay. So also a lot of exits came along the line. I think we hold our promise, and I'm quite happy with the development of the same. Exit pipeline this year also seems to be very strong.
Okay.
Some of the exits have flipped into this year. We are, with some of them, we are further down the line, and with others, we have just started. However, the exit environment in specific segments, for example, in the energy segment, very attractive at the moment. Very, very attractive, right? Yeah. Exits in the infrastructure environment, very attractive at the moment. So this is where we look. Obviously, if you want to exit the retail business, it will be tough to find a buyer.
Yeah. Okay. And how does the process work? So is there a playbook in terms of moving from optimization to harvesting? Well, how do you think about it?
I mean, we kind of look from the back, right? So we want to make the first, let's say, couple of weeks and months, we stabilize the company, we make it stand alone, and we put our game plan in place. And then it's really, bring the company, make the company nice, clean, and separate in order to, sell it. So we question a lot of our decisions. We question, what is the impact in an exit, right? And we know who we want to sell to.
Yeah.
So this is kind of the playbook. We have a very structured way of doing it the first 100 days.
Yeah.
And then it depends what the playbook says after the first 100 days. A little bit like in football, right? The first drive is always scripted, and then it comes down to the decision of the offensive coach or the quarterback, what he does.
Yeah.
And so we have the same.
Okay.
Don't call me a quarterback, but
not least for your Texas relatives. You previously said, I think you said this, that if you can't generate competition in an exit process, you stop it. I just want to check, is that still the case? And you talked about some of the sectors that are attractive and less attractive, so perhaps don't need to go into that. But is that how you typically run it, which is you want to make sure there's a competitive process?
well, yes. I think this drives the process competitiveness, right? If you have only one, if you only have one choice, it's maybe not the best choice, right? We stimulate, and we have a clear target to have competition in a process.
Yeah.
This is, in an exit process, for me, the number one, with what my guys, but also our investment banks or our advisors have to set up, right? Because you can have a discussion about market multiples, etc. That is all fine. And I'll ask the question of how do you see the multiple development? At the end of the day, the multiple is defined by competition. Full stop. Right? If you have no competition, the multiple is normally low.
Yeah.
If you have competition, multiple is high.
Okay.
Right? So as easy it is. So yes, in an exit process, I want to have competition. If not, it's not an exit process.
Okay. Let's move on to capital allocation. There's a bond refinancing for 2027. How are you balancing exit proceeds and utilizing them between debt reduction, new investments, and paying out dividends? What's the thought process?
Um, Let me structure the different
Yeah.
silos a bit. So, on the dividend side, let's start with that one. We have said if there's a base dividend of €2, which we want to pay out,
Yeah.
and we have stick to this promise. And given the fact that we have not ad hoc anything else, this is the thought process of dividend. Then on the bond side, we want to reduce the bond. This is a clear signal. So part of the 2027 bond shall be repaid, and then part of the 27 bond shall be in one or the other form refinanced, rolled over, newly placed. We are not there yet. But then on the other side, we also have some challenges. As I said before, growing in the US market also means you're going to pay the balance sheet, not P&L.
Yeah.
So you need to allocate some capital in a transaction, because obviously an acquisition financing of 100% difficult. So also part of the money really goes into the growth in America, but also in Asia, right? We have talked a lot about the US, but we have also a new office in Japan where we see the first, pipeline now really building up. There's a good pipeline in China, and there's a good pipeline in India/Middle East. So it's the growth of Mutares in the next 5 years comes outside Europe.
Okay.
For sure.
Okay, and let me just clarify on the dividend. I mean, you've given, I think, the holding company income guidance of 130 to 160 million euros
Correct.
net income for this year. What's the relationship between that and the dividend? How should investors sort of think about that?
Well, it's the earnings per share, right?
Yeah.
At the end of the day, what we want to do is, and we look very carefully on that. So we say we have a base dividend of €2, and then depending on the success of the year, but also depending on the future plan and what's on, right?
Yeah.
We can top it up or not, right? Given the fact that I think, we haven't announced anything, but if you look at what's coming up, right? We want to grow in the US, which is a capital allocation topic. We want to repay part of the bond, which saves on the long term, obviously, interest. And then at the same time, I think we at least dividend out the basic dividend. So these challenges coming ahead, capital allocation to me goes, my priority is growth.
Okay. Let me just touch quickly on risk and because I think you've given a fair amount of sort of color in terms of the forward-looking side of things. I just want to talk a little bit about risk and risk management in particular. So again, last time I think we talked, you said that 1 in 10 deals doesn't evolve as expected. I think you've got a portfolio of about 34 companies. So how do you manage concentration risk, and how quickly do you intervene? Head office or yourself intervene when turnarounds stall?
Yeah, I mean, we acquire companies in difficult situations. So some of them do not work. So if you take my ratio from last time, then we have roughly 3 to 4 headaches in the portfolio. I can confirm we have 3 to 4 headaches. Well, and in all fairness, a lot of them are on the automotive side, but that is how it works. I mean, important, I think, to understand is how we acquire businesses, right? So we have the listed company, Mutares, where you can buy shares on the stock exchange. And below that, we have our SPV structure.
Yeah.
And below the SPV, obviously, there's the OpCo.
Yeah.
And so everything is ring fenced. So if one company doesn't work, we have to decide if we want to support them or not. And I think this is important to understand. That's from a legal perspective. Obviously, from an operational perspective, we have to look at more details. So we have our guys on the ground. We have 160 people who are in and out of these 34 companies every day. And we have to analyze what we can do, right? And is there's a future and what we can change. But believe me, good news comes fast, bad news comes faster. So it's on my desk. And then, I have to make, at the end of the day, the decision what to do.
Okay, let's wrap up. Okay, if we were sitting here in 12 months' time, what would success look like for Mutares?
First of all, you would see less of me because I have the same challenges every year in January. I want to lose weight. But let's see if that works out in 26. It hasn't worked out the last 10 years, but 26 is my year.
Yeah.
No, I'm joking. I think what we would have is I would like to see that we have further growth in America.
Yeah.
I would like to see that we have further growth in segments like energy, like construction, but also like chemical.
Yeah.
And I would like to see one additional office opened.
Yeah.
And I would like to see that we have exited the companies we are planned to exit, where two of them I am very optimistic will be a blast and will be massive.
Always a pleasure, Johannes. I find these some of the most stimulating and entertaining conversations I had. Johannes, thank you very, very much for your time. For those who want to find out more about Mutares, there is very good information on their own IR site. You can also visit www.edisongroup.com and have a look at the landing page for Mutares. Thanks again, Johannes.
Thank you so much. Appreciate it.